Upbeat risk sentiment pushes USD lower. Asian equity markets advanced at the start of the week despite weak economic data out of China and Japan. China's official manufacturing PMI slipped to 50.1 versus 50.3 in January, while the Caixin PMI fell to 49.1 from 50.9. In Japan, retail sales, industrial production, consumer confidence, and housing data came in lower than expected. On the positive side, however, Japanese PM Kishida said they are not currently considering issuing a state of emergency regarding the pandemic. Australia's ASX 200 climbed after the RBA said it is ending the bond buying program. The central bank said that the conditions for rate rises were not yet in place. Also on the positive side, the bank pointed to significant improvements in the jobless rate and the broader strength of the economy. In the US, stocks were also buoyed and the recovery was spurred by dip buyers and mostly positive corporate earnings. The Nasdaq Composite jumped 3.4% on Monday as Tesla and Netflix rallied over 10% each. The next day, markets closed higher again. On the data front, U.S. job openings rose to near record highs in December, while the manufacturing PMI ISM fell to 57.6, the lowest level since November 2020. Meanwhile, the Fed's Bullard said that he would support a rate hike at the March meeting and prefers a rate hike in May. European markets extended recovery on Wednesday as investors digested strong corporate results, with the Pan-European Stock 600 closing up 0.5%. Santander reported a strong jump in fourth quarter profits. The Spanish bank said that it released 750 million euros in COVID-related provisions in the quarter. Santander shares closed 0.33% higher. As for the data, inflation in the Eurozone notched a new record high, rising to 5.1% in January versus expectations of a sharp drop to 4.4%. Earlier in the week, Germany's retail sales tumbled 5.5% on the month in December versus a forecast for a fall of 1.4%. The ECB's governing council is meeting today, and the central bank's tone could affect investor sentiment ahead of the weekend. Wall Street stocks finished higher on Wednesday, extending their weekly gains, with the technology companies lifting the broader market again. The S&P 500 rose 0.9%, the Dow Jones Industrial Average added 0.6%, and the Nasdaq gained 0.5%. In individual stocks, Google parent Alpha jumped 7.5% after it said its digital ad business propelled a 36% jump in profit last quarter. As safe haven dollar demand cooled, the USD index has been retreating this week from fresh long-term highs, along with the US Treasury yields. The Euro USD exceeded the 1.1300 barrier to notch local highs around 1.330 before retreating marginally as the traders take profit ahead of the ECB meeting outcome announcement. The common currency could regain the upside momentum if the central bank expresses a hawkish tone, citing record inflation numbers. Elsewhere, gold prices saw a turnaround on Monday following 3 days of losses. The XAU-USD pair bounced from mid-December lows seen around $1,780 late last week to get back up above the 100 DMA. The bullion extended gains to the $1,810 region before correcting slightly lower early on Thursday. While the $1,800 figure represents the immediate support, the next barrier for gold bears arrives at $1,795, where the mentioned 100 DMA lies. Meanwhile, Asian stock markets were mixed on Thursday amid some profit-taking following a recent rally. Also, markets turned cautious as investors braced for the ECB and the BOE monetary policy announcements. Stocks in Australia posted mild losses for Japan's Nikkei 225. Bucking the trend, South Korea's Kospi rallied 1.9% to record the biggest daily gains in a year as markets in Seoul reopened after 3 days off. U.S. futures turned sharply lower, with Meta stocks plunging about 20% in after-hours trading as the company reported weak earnings, fueling worries about the tech sector. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.